In this video, I'm going to show you exactly how to get started trading stocks as a beginner using a low stress strategy. And this is going to be great for people who have a busy schedule. So my name is Tyler Stokes, and in the first 6 months of trading real money, I actually doubled my portfolio. And this was a portfolio made up of over 20 stocks. And actually in our school group, there are hundreds of beginners who are learning this strategy right now while managing work and their family life. So what we're going to do is break down the trading basics, the tools that you need, and a fast track strategy and some mindset tips. So if you're feeling overwhelmed, there's a lot of trading info out there. This video is just going to give you a clear, sort of beginner friendly path on how to get started. And as always, there's more training and information in our school group. You can find a link to that in the video description. So the first thing that we want to do is we want to understand what stock trading really is. So you need to know that trading stocks, it's about buying low and selling high, but it's based on price patterns and a price chart. And we're going to look at a price chart as well. So it's not based on fundamental analysis. So if you're sort of used to investing in the past, maybe you invested in a few stocks, or the mainstream media or just everyone in general kind of understands that fundamental analysis is when you look at like the balance sheet of a company, or you look at their earnings report, their price to earnings ratio, and things like that. With trading, we don't use any of that. You actually can ignore a lot of that and you just focus on the price chart. So fundamental analysis, it's not something you use. And I think this trips up a lot of beginners because they're just so used to knowing what a company does, knowing the future catalysts that are around the corner, and so on. And they want to trade stocks based on news, narratives, and things like that. But you actually don't want to do that. You just want to focus on the charts and the price patterns. And I think at first that can be a hard thing to really understand. But the more you look at price charts, the more you trade, you'll come to understand that the price chart knows what's happening before the news comes out. So the market already knows what's happening before a product launch, before good news comes out. So you really just want to focus on price patterns. And what you want to do is you want to focus on momentum trading. That's the strategy that I use. And what happens there is you're buying stocks that are in strong uptrends, and you hold these stocks for various time frames. So this is ideal for beginners, and it's really hard to lose money this way because you're just trading with the trend. If stocks are bullish, then you can buy at key support zone. So what we want to do as a beginner is we actually want to avoid day trading. So when I first started, I thought trading was day trading, but I soon found out that day trading can be very stressful. It just doesn't fit most people's schedule. If you've got family at home or you've got a 9-to-5 job, you're probably not going to make day trading work. But momentum trading, it's a low stress strategy. It fits most people's schedules, and it's just better for beginners. Now, once you sort of establish that, you'll want to next just get your basic tools right. Now, this tripped me up at the beginning because I thought I needed some crazy software, some specific brokerage, or I just didn't know, what I needed to make trading work. And it's actually super simple. You just need a brokerage, so a place where you can buy and sell stocks. You might already have one of these set up, and you just need one bit of software. You can use it in a web browser called TradingView, and then you want to set up a paper trading account. So you want to start trading fake money, so it's a virtual account or a simulated account. So in terms of brokerages, if you're in the States, you can get one with Charles Schwab. Thinkorswim is a really popular platform for trading. So I would recommend that you just go out and sign up for Charles Schwab, or a really easy one to use is Robinhood. So Charles Schwab, it's a little hard to say there. Thinkorswim, so this is a platform that gives you all the features you need. The fees are great. I would recommend, if you don't have one set up, just go here. If you want a super easy one, Robinhood is easy to set up, and you can trade stocks. You just need to be able to buy and sell stocks. So most brokerages, in fact, all of them, will allow you to do this. Weebill's another one. If you're not in the States and you're in Europe, the UK, or Canada, Interactive Brokers is good. Personally, I'm in Canada. I just use Questrade to buy and sell my stock. Wealthsimple is another one here in Canada that you can use. But the bottom line is, don't stress about this and just open a simple brokerage account. And then for your trading software, TradingView is probably what you're going to use. This is what I use. And if you go to tradingview.com, I just have the window here in incognito. You're going to see this screen. Just get started for free. When you click get started for free, you'll just need to sign up, and it's $0. And if you don't sign up for an account, then you're going to get all these pop-ups that come. So just sign up for an account, and then eventually you're going to probably want to get this essential plan, because it allows you to use several indicators. So start free, and then eventually move to the essential plan. And that's really all the tools that you need. Not stressful. Don't stress about it. It's really, really simple. Keep it simple. That's all you need. And then the next thing you'll want to do is learn a little bit about technical analysis and reading price charts. So this is actually a big topic. Can't cover it in a video here, but you want to just know the really basic things. And why don't we just do some basic stuff right here? So we just need to first learn how to read a candlestick chart, and then just know what basic market structure is. And just with these two things alone, you can really be able to find stocks that are good to invest in. And then as you get better at technical analysis and you learn how to use some more indicators, you basically combine all these indicators for something called confluence, when several line up and they'll indicate, hey, this is a good buy zone, buy now. Or if they several line up showing that this is a bad buy zone, don't buy or potentially sell. So that's what the word confluence means. Basically, when multiple indicators are telling you that something is in a strong support zone, a good buy entry, then you buy. But basically, reading a candlestick chart is important, and knowing what market structure is. So in our school group, we actually have a course on this. And in this module, there's a whole module on reading candlesticks. So I thought we'd just go and look at this image here. And basically, these are candlesticks, and you'll want to know exactly how they work. And if you're not going to grasp it from this quick demonstration, come to this course. You can go through this module. There's a whole video on this. But basically, on a price chart, there are green and red candles, and they show you when the price opens and closes for a given time frame. So if we look at a price chart, this is what it is. If this is confusing for you now, just know that learning this for a little bit of time, you're going to understand exactly how all of this works, and it's going to become second nature. Whenever you look at something for the first time and you've never looked at it before, it looks confusing, it looks complicated. It was that way for me as well. But once you get a handle of it, now all of this makes perfect sense, but it just takes a little bit of time. But basically, these are what are called candlesticks, and they represent time. So this particular chart is a weekly chart. So all of these candlesticks represents 1 week, Monday to Friday. And you can have candlesticks representing a day, an hour, 15 minutes, and so on. So basically, what happens is the green candles mean that the start of the week, the price was here at 398, and by the end of the week, it finished up here at 436. So for this particular week, the stock went from a low price to a higher price. Therefore, the candle is green. This particular week, the stock started here at 441, but it closed the week on Friday at 420. So it went down. So it is red. And then the candle wicks, so the shadows or the wicks are the price, the highest price that it went in that particular week, and the lowest price it went in that particular week. So if we jump back over to our lesson here in our course, we can see that for this green one, the open price was down here, and the lowest the price went during that given week, so if these are weekly candles, was all the way down here, and the highest that the price went during that week was the very top here, the top of that wick, and then the price closed at the top of the candle here. So the open is here and it closed up here, therefore it's green. So the price opened here, maybe went down here, and then all the way up here during the week, and then it finished right here. A red candle means that the price opened here, and maybe it went all the way up here during the start of the week, but at end of the week, it went all the way down here and it finished lower. So the candle is red. So price opened here, went down, closed here. So this is red because the price went down. This is green, the price went up. And again, these candles can represent 1 minute, 1 hour, 4 hours, 1 week, 1 month. and so on. So that's the basics of a candlestick chart. And basically, this is what we want to look at when we are trading, because this tells the story of the stock. It tells us if it's bullish, if it's bearish, if we should buy, if we should sell. And then you use various tools along with the price of a stock to tell you when to enter and when to exit the stock. Now, one of the simplest things to learn how to read is basically what's called market structure. So if we kind of zoom out and we can look, this is the Tesla stock, and we can zoom out here and we can look at it over the years, and we can see that in this area we had the price was here, and you can see that it slowly declined. And what basically this is telling us is the market structure went from a high, and then this stock, this price right here is what's called a lower high, and then here it's a lower high, and it's basically angling down, and the highs are getting lower, meaning that the price over time is going lower, and that's bearish market structure. So it's high here, and then it's a lower high, lower high, lower high, lower high, till it went all the way down to the low in January 23. Versus if you look at what's happened here, where April 2024, Tesla went all the way down to 138, but we've got a high here and a low, and a higher high, a higher low, and we're working our way up. So this market structure, it's more bullish. It's up and to the right, and we're making highs and lows to the right. Whereas back here, this market structure is bearish. We're making lower highs and lower lows. So, price charts aren't perfect, but that's the general consensus with market structure. And you can go and you can look at any chart, and you can tell right away, if you just look at the market structure, if the stock is bullish or it's bearish. So that's just a basic first thing that you need to learn, is how to read the candlestick charts and how to understand what market structure is. Now, again, there is more to learn. A technical analysis is quite a big subject matter. So I would recommend that you certainly head over to our school group if you want. We've got a whole course all about this, covering various different topics of technical analysis. Now, the last few steps here is save time with what's called the direct approach, strategy first and success later, instead of going out and exploring various strategies and different markets. So the explorer's approach is something I did, and it took me way longer to actually get trading because I studied various markets. I went and studied the Forex market, the futures market, options, and it can just take a lot of time and can be really overwhelming. So if you're a beginner, I'd recommend you just choose the direct approach, pick a proven strategy, learn only the essentials, and then you can get started trading in weeks, not months or years. So the direct approach, it's sort of like hopping on a highway to your destination. You're going to evaluate strategies that fit your lifestyle. So again, we mentioned, day trading is probably not going to work for people with busy schedules. Day trading might not work with your personality type as well. So I would kind of skip that and use a momentum trading strategy. It's going to be better if you're busy and you just can't log on, watch the market every day at 9:30 a.m. And then you just learn enough. So focus on strategy specific tools and skip the rest for now. So there's so many technical indicators out there. If your strategy doesn't use them, there's no point of learning them. And then start paper trading. So we mentioned that TradingView has a paper trading account. So on TradingView, you can set up your TradingView account to have a paper trading account where it's simulated. You're not trading real money, and you can actually make trades, feel the emotions of trading, putting on a trade, and practice the strategy without risking real money. A lot of people don't do this. I would highly recommend you at least start paper trading. And this way you can gain experience over time. You can learn the markets as you go, but you can narrow your focus and go live much sooner. So with this approach, you can really start trading in weeks if you find a strategy and just jump in and learn the essentials, instead of going out and trying to figure out a strategy yourself, which is probably not good, or just going and reviewing and researching all these various markets and strategies. You're just going to waste so much more time doing that. And then also, you'll want to master your mindset. Now, this is something you can't really get from a book or a course. You can't buy experience. So it's best to start paper trading and understand that the mental side of trading is huge. It's maybe 80%. You really want to trade and start experiencing these emotions and be aware of them, and then journal them and track them. And that way, when you come to make a trade and you start noticing that you're making these mistakes because your emotions are taking over, you can track that and you can hopefully mitigate some of the losses that you're going to encounter. But just know that the mental side of trading, it's huge, and you really don't believe it until you jump in and make trades and understand that you're making all these mistakes because you're emotional, you're panicking, or you are, watching the news narratives and so on. So this is something that people can kind of tell you that risk management is important, or don't trade with emotions. But it's not until you actually go out and do it that I think these lessons sink in. That's why people say that there's a tuition to getting better at trading. You're probably going to lose, and in losing, you're going to learn and get better. So you're going to make mistakes, but you can't buy experience. And this is why I would recommend that you go with the direct approach, find a strategy, and start trading right away, because it takes time being in the market and seeing what the stocks do and experiencing things for you to get better. So if you spend so much time trying to find a strategy, then you're going to also need to spend time actually just focusing on that strategy, being in the market, gaining experience until you can get better, start trading real money, and then start getting results. So the next steps for you here, if you want to make all this work, would be to get with a community, find a strategy, get feedback. We have that in our school group, so you can go to school.com/trading, or you can find a link below this video if you want to find out about the strategy that I'm using. And again, in our school group here, there's a full course about it. We've got a community where we're sharing videos, we're sharing analysis on various stocks. You can come and be accountable to this group. You can find the strategy, find the course, and get started in weeks. Many of our beginners are starting, they're going through the course, and then they're trading in weeks, where it took me like a year and a half to actually get going. So I would recommend that you check that link out. And also, if you want more trading videos, then you can check out the video that's on the screen right here.